Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show and Happy New Year.
Jim, Happy New Year to you and Happy New Year to all the listeners, and I wish them all a very prosperous and healthy 2022.
Ted, the real economy rolling into 2022, what's the picture there?
Well, last year, the Canadian Insider Index really beat the pants off of just about every other major index in North America. It advanced 43%, and that was led by energy stocks. Now, I don't think you can get a much more real economy than having to put gas in your car, fuel your factory, and keep things moving. And that's what energy is all about. And that was the leading sector last year in Canada. And in fact, the S&P TSX Capped Energy Index rose 80%. So a lot of victory, well-deserved victory laps for oil patch investors last year. We know they've had to, go through some many and trying years. And last year, the energy sector came back with a vengeance. And you know what? The momentum seems to be continuing into 2022. It's rolling right along. So we put out a piece on Tuesday about the real economy rolling into 2022, and we focused on the opportunities we were seeing in the energy space. And yesterday, we noticed that during the massive market volatility binge that went on after the Fed minutes were released, lo and behold, guess which stocks were the big performers? It was, sorry National Observer, I'm sorry Greenpeace, it was big oil, specifically big Canadian oil stocks. They went up while the stay-at-home big tech stocks in the U.S. got clobbered. So that leads us to think that there's some big money making a transition from the old, which was the big tech trade, into the new, as begrudging as it may seem to be, to have to get one's portfolio involved with something as untoward as, resource extraction. At the end of the day, fund managers need to at least beat the S&P 500 or come close to it or be in the ballpark. And big tech is going down for the count. You can hang in there and you can just try and explain to everyone as a institutional money manager how, you can't beat the S&P 500 when big tech is going for a dive, or you can move your money into big oil when oil prices seem to be pretty resilient here. They've had plenty of time now to roll over and head back down to 40 or 50 or wherever the thermal oil bears think that it should be. They've had plenty of opportunity for that. And my sense is that oil is likely to continue to go higher than lower. And it seems, Jim, that a lot of big institutional money managers are feeling the same way. No, sure, maybe Wednesday was an aberration. Maybe it was just noise. But based off of our signals and based on what we see insiders doing in the first week of the year, the energy sector, is starting 2022 on a roll.
In the past year, we saw institutional investors pull out of funds that look for oil and gas. Does that mean that we're going to have natural gas and oil shortages in the near future?
Well, if it weren't for government, there would be no problem. But we've had a mishmash of energy policies around, the democratic world, the Western democracies. Their governments have really made a mess of things. And you know what, Jim? This is not going to be a popular view, but actually Canada is one of the best places. Yes, I know there's all sorts of criticism about Justin Trudeau, but the fact of the matter is he doesn't have that much of a say on energy policy. Yes, he does have climate policy, and we all, are aware of the challenges that the oil patch has to deal with in dealing with that. But the fact of the matter is that the provinces in Canada have so much constitutional control over the resource that really in Canada we're looking pretty good. So, all the mistakes being made in Europe, in the United States, England, that have been made over a number of years, chickens are coming home to roost. So it's, back to some decent times in the oil patch in Canada, as we have the capacity, the financial capacity, not just the oil and gas capacity, to produce oil and natural gas. And, we will see how disciplined Canadian producers are. What we follow many of them when they come up on our screens, and we've written about them all week in our morning reports. We're going to write about another one for Friday. We'll change sectors next week, but we wanted to make it clear out of the gate that the energy sector is not dead by any stretch. Just because it went up 80% last year, that's nice, but sure, you can learn from the past, but we're not concerned about where a stock went. We're concerned about where stocks are going, and initial indications for the energy sector are pretty good. So we have the capacity in Canada to produce more oil and gas, which I think will be in demand. Yes, it will ebb and flow. Yes, especially the natural gas. It's once winter goes through, you get a warm spell, and natural gas prices will go down. Everybody will, oh yeah, you see now we don't need natural gas anymore. Then we'll have a heat wave, and this, how it goes, right? So natural gas is a bit of a roller coaster, but the trend seems to be your friend in this case, and the trend seems to be up. So yeah, it's looking, the pain, Europe and America's pain will be Canada's gain when it comes to natural gas and oil in 2022. That's the way it's looking.
What are the insider buyers doing right now?
Well, in our report that we put out on Tuesday, we upgraded a lot of the real economy areas. We didn't upgrade energy because it has such a big run. So at the sector level, we have it at fair value, but there are plenty of opportunities at the stock level, which we write about. However, we've also upgraded the consumer sectors. That's interesting. Insiders there seem to be pretty upbeat. And in the consumer sector, by the way, and it also includes those auto parts makers, which you kind of think, well, maybe they're in industrials, but actually the way Refinitiv Thomson Reuters classifies them, they're in consumer cyclicals. And when you think about it, this sector's been left for dead by investors for years. And, no matter what you think of Tesla, they are changing the game in the auto sector, which is forcing auto companies to respond, which is actually opening up some opportunities for auto parts makers, because there's new models being built, new factories being built to equip, vehicle lines that will compete with Tesla. Right. It's actually going through, I think, a bit of, a renaissance, not a renaissance, but a new phase in the industry. And yet, you've got investors couldn't care less about it because, for years it's all been about 5 or 6 big tech stocks, plus Tesla. But now, with the U.S. Federal Reserve about to raise interest rates, there's a rethink about, maybe we should start looking at these valuation things here. How do you do that again? We haven't looked at those for a decade or so. What is it? The PE. Now, what is that again, Jim? What is that again? Now, price of the stock divided by the earnings. Oh, but what if it doesn't have earnings? Some of these big money managers, particularly in the U.S., have to get their heads around this. This sort of idea about having to do fundamentals. I'm being a bit facetious, but the smart ones and the ones who understand the score here seem to be moving pretty quickly, and so we're pretty upbeat on sort of the auto area as well. And again, it's a stock by stock situation, but again, real economy, real things for get people moving. So that I think is one of the positive trends that we're seeing for 2022 already. We've also upgraded the financials. That'll be interesting. Watch your wallets, folks. When there's inflation and rates are going up, and gives banks and companies that in the financial space the opportunity maybe to increase their margins a little bit, up their fees, a little bit here, a little bit there, and all a little bit here, a little bit there. When you've got like a $100 billion loan book, amounts to something. So yeah, we were upbeat on the Canadian market last year. We're still upbeat, although this year we're also very concerned about some of the underlying trends we see in the market, in society, monetary policy. There's a lot going on, we think, that on the risk side that will certainly continue the bull market in volatility, which we've seen. This will not be a market that you'll want to be kind of writing covered calls and or whatever option strategy. You're writing insurance, basically it's being in the insurance business. You know what? I don't think being in, and I don't mean property and casualty insurers, that those stocks. I mean, like, as individual investors, sort of be getting in the insurance business to insure other investors about bad outcomes. Like, I'd be on the other end of that. I'd be more looking to buy insurance for bad outcomes in 2022 than on the other side. And actually, when I mean writing it, like doing call strategies and the like. So, upbeat, but also mindful of what we would suggest is, a restlessness in Western democracies turning towards either reform or worse, revolution. I'm not saying we're going to have a revolution in 2022, but are we going to go down the path of reform? Or are we going to go down the path of revolution? And I think, in terms of you can throw your own probabilities on, do we just stay status quo? Yeah, that's the base case. That's, I don't know. People can put their own assessment on that. Maybe it's 80%. We just muddle along here and people grumble, but everything's fine. Or do we get up to the point where, we start seeing a positive political dynamic unfold where reform-oriented politicians start to gain traction? Or do we see what's happening in places like Kazakhstan, where people get so upset, primarily driven by inflation, that things start to go off the rails? So, it's going to be, I think, an unsettling year in many ways. But let's, focusing on the positive Canadian market, and I'm glad I'm here and looking forward to the opportunities in it.
We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, the federal government seems to keep hinting that it wants to tax your home equity. So no longer would you just have to pay municipal property taxes, But Ottawa now wants a hunk of the equity built up in your home every year as well, it appears. What's that going to do for the nest egg that people thought they had in their home and for seniors on fixed incomes who live in their own homes?
Yeah, I haven't heard that report, and I'm skeptical, just because I do not believe that the Liberal Party of Canada would be that dumb to do that. When I mean dumb, I mean politically dumb. Look, I'm not talking about whether there's an economic case for it or not. I just do not believe the Liberals are that dumb. So I don't think that's going to happen. I could be wrong, but certainly if they were to do it, that could lead to the revolution that we were talking about before the break. So no, I don't see that happening. At least not in the obvious way. Like if they found some sneaky way to do it. But even then, I just don't see it. I see it potentially happening more at the municipal level or the provincial level. But even there, politicians at the local level in Canada, they know that touching home, anything on the home is the third rail. And so, you can accuse politicians of being a lot of things in Canada, but most of them are smart enough to know that that's not a winning political strategy. So I wouldn't lose too much sleep over that if you're a homeowner out there. But I could be wrong. We'll see. But I wouldn't bet on that. I wouldn't worry about that. There's other things to worry about. Inflation being the big one. And I think that inflation is hurting a lot of assets right now, and it could hurt real estate, depending on what happens to interest rates and depending on how the Bank of Canada reacts. That's a lot of big ones, and you've got some good guests to talk about the fundamentals of the real estate market, so I'm not going to make any predictions there. I'm just saying that if interest rates started to fly up, that would have an impact on the real estate market. They're not flying up yet. They're inching up. But inflation's already hurt the crypto market, and I think Raoul Paul was talking about this on in Culture Money late last year, is that as costs go up, people have less money to spend on things, discretionary things that, and like dabble in crypto. And, or people have big expenses to pay, so they have to sell their crypto gains to pay for them. And so initially, I think inflation is going to hurt the cryptocurrency market. Has hurt it. I think it has hurt it. But the question is, with the Federal Reserve kind of in a box, what happens when more people start to come around to that view? That's my view. Mainstream institutions don't buy that. Mainstream institutions go with the flow. I mean, that's where their bread is buttered by the Fed, right? They're not going to fight the Fed. Okay. And I'm not suggesting people fight the Fed. All I'm saying is basically they're in a box. And at some point they're going to have to make, in 2022, I expect, some very tough decisions. Do they crush the labor market, or do they let inflation move higher? And at that point, people will go, wait a minute, there's all this fear and loathing about crypto being overvalued and, Fed taking a hammer to it. Well, wait a minute, maybe we should be looking at a decentralized alternative to these 12 people who control the money supply in the U.S. I mean, we have a very centralized money supply management in the United States. In Canada, it is worse because we have one person, the Bank of Canada governor, who basically has the final say on every monetary policy decision. So eventually, once we get past the restlessness stage I was talking about, that's again where assets, I think, like crypto and gold will again start to really resonate with the average person. And so, we're in this kind of weird period now where the Fed is like saying, well, we're going to now we're really thinking about reducing our balance sheet. Well, they're actually increasing their balance sheet. I mean, it is so bizarre. So those of us who follow it, and and I know your listeners follow it, and they're well aware. But the person, the person on the street, the person who's just trying to make their ends meet, They don't have time they don't follow this. They just, turn on the news and they see, oh, it's the 6th anniversary of the storming of the Capitol Hill, and did Trump do it? It's all distraction, right? I mean, not to, by the way, downplay what happened on January 6th last year, but, then the media, they turn it into a major kind of entertainment event, basically to keep you watching, and without getting to the root causes of what drove people to do what they did a year ago in Washington. What is driving this restlessness, and that's percolating up. I mean, those are the key issues that need to be dealt with, but they're not being dealt with. Just like energy policy, as we started the show, has not really been dealt with in Western democracies. It's been patchwork. It hasn't been thought through. Look, Jim, if we have an emergency, right? If we have an emergency, shouldn't you stop to do everything to deal with it? I was just driving home yesterday, and by our place here in the Lower Mainland, and I noticed driving by, a security guard was giving this fellow CPR. And it ended up drawing on me. Well, the ambulance is down the street. They can't find the guy. So what do? I stop the car. I rush out to find the ambulance. Say, are you looking for someone? It's over here. Like, I stopped. I stopped what I was doing. I didn't keep going. I didn't go, oh, well, let's see. What else do I have to do right now? But with this so-called climate emergency, well, let's look at the Biden administration. How is it handling the climate emergency? Oh, we're going to build back better. Oh, well, what's in build back better? Well, we're going to deal with child poverty, and, we're going to deal with income inequality. And, okay, wait a minute. So those are emergencies too? Oh, and we're going to deal with child care. Okay, look, yes, child care. I understand that the arguments for child care, but is there an emergency for child care? Have I heard, Jim, have you heard about the child care emergency? No, I've heard about the climate emergency, right? So, if you're going to deal with the climate emergency, you should treat it like a climate emergency. Like 2 years ago, there was a shortage in the world of personal protective equipment when COVID hit. It was an emergency. Governments were doing whatever they could to get masks, gowns, the like. Okay, we've known about this climate emergency now for how long? Decade? 5 years? 10 years? 15 years? 20 years? What's happening? What are we getting in Build Back? What are the Americans getting in Build Back Better? Oh, well, we have to support EV, but they have to be built by union shops in America. Well, if it's a climate emergency, shouldn't you be scrambling to get your EVs anywhere in the world that you can get, just like you were scrambling to get PPE? If it's a climate emergency, shouldn't you be building nuclear plants 5 years ago so that you could charge these EV cars with a clean source of energy? But no, that's not what we have. We have a bunch of slogan and a bunch of piecemeal policies. And you know what? So either you got an emergency or you don't, right? And people are going to see through this. And that's why there's this restlessness. I mean, it's not just with the climate, but it's also now with the way COVID's being managed. There's just this restlessness. And then you've got the Fed, right? And it's like the Fed now is going to have to, pull a rabbit out of its hat. It's going to have to kill inflation, without killing the job market. Good luck with that. We'll see. Maybe they can do it. But restlessness, Jim, it's a big, it's going to be a big theme, I think, for 2022. But coming back to your original question, I don't think Ottawa is going to be taxing the equity in anybody's home anytime soon.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca. You can find him on his website, CanadianInsider.com. If you have any questions for Ted, we'll ask that question for you if you send it to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.